Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and we're not even near being closed. We're at 130, but the settlement prices are in. Remember, settlement prices in the metal markets are determined at 12:30 p.m. Eastern Time. So we're already at that whole zone that we've done. We've had it a while, and we're right in this neighborhood where you're going to see the settlements come in. So I figured, what the heck? I can get out of here early and enjoy the remaining summer days once they close the S&Ps and the like. And as I'm looking at the markets, the events of the day, we keep pointing fingers at Iran, but nobody's really saying it's them. I do not expect that the U.S. is going to attack Iran. It would be the Saudis that would do that, because we don't even have a treaty with Saudi Arabia to protect them, to the best of my knowledge, and no American assets were hit. It could be them, and we can go back up with that. We'll see if that ever happens. I think that everybody's trying to slow this thing down, and to my amazement, the Saudis are saying that they'll be back to 70% production as early as the end of this week. Yes, there's some buildings that have to be rebuilt and the like, and the word is that China has already leased 4 oil tankers, U.S. tankers, to take oil to them. So everybody's moving very quickly to get oil moved around the world to lessen the impact of this. But going back to the metals, you know tomorrow's the FOMC meeting. So we're going to get the FOMC statement at 1 o'clock p.m. Central Daylight Time. At 1:30 in the afternoon, we're going to see Chair Powell, Fed Chair Powell, give his press conference and answer a lot of questions, and that is where the action, in my opinion, starts picking up. Is this the last cut? Does it sound like there's more? U.S. economic data, what does that do? If we look at a weekly chart of gold, at least through the first 2 days of this week, we're up $10.90. We're still off the high close that we've made in many a long time of $15.26 by $23, not too far away. When we look at the price action, it's not appealing. This market's acting like a market that wants to continue to slip back a bit. In fact, if you look at the trend, you could argue you've got lower highs. I could also argue that this number at 1492 is higher than the 1493. So what we're doing is forming this triangle. And out of the triangle, a downtrend line, a small uptrend line through here. Which way does the market decide to go? For the moment, I'm going to say that the bears have control because of the lower high legacy and lower lows. Yes, when you made this higher low, that came after the fact of this big low here. So I'm going to state that the bears still have control of the market. And it's still on the defensive posture as to when I wrote my gold report a week ago, talking that I thought this low that comes in by a Bollinger Band, might as well put that up, was going to be an important low. What you did is you rallied back to that line in the sand, the 18-day average, and you have paused. For those of you that get my twice daily written reports, you know what I told you to do in gold yesterday. I'm not going to give it to the other people. Now the question in gold is this. Does the market work its way down to the lower Bollinger Band again, where I'd expect support, or does it not take this number out, 1493.10, reverse course, take out yesterday's high, and close over 1525. That is what you need to be bullish. Bearish, you're already in that with the support level. So I've defined the 2 areas that you're at. As for momentum, it's oversold. It's not trying to embed. Embed means you take these numbers, they both get under 20, and they start going sideways. You have not done that. You're in an oversold market looking to see what it's going to do next. However, the bias is down since you're under the 18-day average. The short-term trend is down as the swing line has got a pattern of lower highs, lower lows. Yes, it's paused, but it's still in a downtrend. When we come to GLD, I don't think you'd argue. You've got lower highs, lower lows. Bearish. When you look at right here, both numbers today are under the 20 level. Now, we're not closed yet, so I don't know where the settlement will be. That's at 3 o'clock. Yesterday, both numbers in this market were under 20, and the day before. So today could be where this embeds, and embeds means that you've locked in the downtrend, and until that red line closes back over 20, you're putting into play the lower Bollinger Band number, and until you lose that red line, the resistance pretty solid at that 18-day average of closes. That's a bear chart. GDX, lower highs, lower lows, hit a downside target, has bounced away from it. The momentum in the market, if you settle like this, you're not embedded. Any number 20 or above means you're not embedded. You have to have 3 days in a row where the market has readings under 20. You certainly had yesterday under 20. You certainly had the day before, but not the day before that. So today would need to see a sell-off later in the day as we go for that to develop. In the gold-silver ratio, we had a bounce from this low level, got up to the 85, and we're back to 83.41, and we are underneath the 18-day average of closes, which means the bias is down, meaning you need less ounces of silver to buy an ounce of gold, which favors silver. And as you could see, silver is up 8.5, 9 cents today. It's still in a downtrend. It's got lower highs, lower lows. Like gold, it is oversold. The resistance is the 18-day average of closes. On this chart pattern, should this market rally up through 1855, all it really does is negate the downtrend. It does not start an uptrend. So I can see how you can negate the downtrend. I don't see how you start an uptrend on this chart, and I would expect that the resistance is going to show up at the 1823 level. In the copper market, we've been in an uptrend, but you have divergence. Momentum is pointing down. The swing line is up and the bias is up. Where did the market stop its rally? If we take a look, first stopped at the Bollinger Band. Next resistance would be the 100-day average. Now there's no resistance over the chart, at least on these patterns. That should be a stall zone. As you can see, the market is stalled out. It is not out of its uptrend. To take the market out of the uptrend, you've got to take out 259 even. Then you would have a higher high and a lower low pattern. This is a problem, though, in the market as momentum's pointing down. In the platinum market, what we have is a higher high, lower low, which is no trend. We have the bias up and momentum pointing down. This market might want to go back to the 18-day average to figure out what to do next. And in the palladium market, as long as you keep the embedded reading, I think the market finds support on breaks. The problem of it is, with this outside day down yesterday, you've put a stall in the market. The bulls are controlling things. This is the strongest indicator I have, so it is still bullish. And until the red line closes under 80, the surprises, as I'll call them, should be to the upside, not the downside. Last, the dollar index. Need you see more to know that this 18-day average, how many days have you hit it? 1, 2, 3, 4, 5, 6, 7, 8, with today 9. Need I say any more? It's a market looking for direction. It's lost. It doesn't have one right here. I think it wants to get through the Fed and see what to do with that. I talk about all these indicators, and you may not understand them. There's a primer that we have, in fact, 2 of them. Technical Guide to Indicators 1 and 2. Our good friends at Futures Magazine helped put this together with us years ago. There's new owners now. We're going to be doing some work with them as well. But, and I'm glad to say, if you go to their site, you will see it, Futures Mag. But in the meantime, we explain all this, and we give it to you in a PDF form, volumes 1 and 2. We'll email it to you. You can print them out. They look just like you're seeing here. They help if you're looking for that primer as to how these work. You're asking yourself, gee, is there something I don't have to read books on that I can get a quick understanding? I think that's it. Go to our website under free offers. You'll see it right on the home page. If you click up here, you can get it the same way. And of course, that old-fashioned way, call my staff. They'll get it out to you. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.